I mean, eventually...
Do you?
No, I think the piper dies.
What does that mean, the piper dies? The dollar dies?
The dollar dies. America dies. We lose our reserve currency. We get rid of the system as we know it. We've got so much debt that it's impossible to pay it back.
The U.S. national debt just surpassed $35 trillion.
You can add debt incrementally, but you can't add debt exponentially. And this is why I think we're so close to that precipice, central bank digital currency, of this is how we're going to fix the system.
All right, Flyover family, we're going to kind of tumultuous times, and there's things going on that are far from us that impact us in a close way, unlike ever before. When you go to pay for something, you're like, why is this the way it is? It's not what's happening in your local community. Sometimes it's nationally, sometimes on a state level. Some things are impacting you when you go to the store or on a global level, and it's not accidental. There is a very controlled demolition of the things that we hold dear, whether it's your faith, your autonomy, and your health, and absolutely on your finances. And the Bible says clearly, with many advisors, your plans will succeed. Well, you need good advisors. And, for 25 years, I have been very blessed to have somebody in our life that has not one, but two PhDs, one in theology and one in understanding how the central banks and global finance works. And in times like that, that's the kind of advisor that I need. He's the author of not just surviving, but thriving in the economic tsunami that we're kind of all experiencing.
Yes.
One and only Dr. Kirk Elliott.
Yay!
Yay.
So good to be here live.
I
In person.
know.
I'm here live.
We love it. So this is the second time you've been in our studio live. This is the first time we've had a repeat, and we're so glad that you're back.
You're our first repeat live guest.
Exactly.
I love that.
I
Yes.
know.
Yeah.
It's pretty exciting.
It is weird being live here because you've got so many cameras and it's
I
such
know.
a beautiful studio. It's like, did you get my best side?
Yeah, how do I
It's
look?
like, yeah.
Well, I think today everybody's more interested in what's in your head than what's wrapping it.
Okay.
And
Good.
it is an interesting time where I don't think any other point in history the mass population was as interested in what somebody with two PhDs is going to be talking about. They're kind of like, I'm kind of more interested in the NFL season starting, or I'm interested in.
Right.
But these things are impacting people in real life. We have people that have spent 30, 40, 45, 50 years working, and they're like, hey, this is my retirement. Why is it vulnerable to people outside? I can make all the right decisions, but there's people coming, against it. There's people interested in these things. I got friends that I went to high school with that we don't talk a whole lot, and they'll text me stuff about the economy, like, hey, the doctor you guys talked, what's going on with this? And
Yeah.
this is international symbol for texting. They're
Everybody
texting.
knows it.
Everyone knows what you were doing.
Exactly.
Yeah.
It's not folks that would be buying a Edward Griffin book or reading Jekyll Island or doing these things, but they're like, hey, this is impacting me, for real. And so I'm anxious to kind of talk about stuff because we're seeing every week there's something that would have been a monumental.
Yeah.
That's once ever, and it's almost every week there's something happening, in the economy right now.
And more recently, it's multiple things in a week
Yes.
or in a day. But yet we're so distracted.
Yeah.
With the Olympics, for example, it's like, well, I could go my whole life without ever watching the opening ceremonies ever again.
No kidding.
I mean, it was so bad.
So
Right.
bad.
Or what's happening with celebrities or what's happening even politically, which people think this is important stuff. Like the horrible governor from Minnesota, right?
Yes.
It's like, okay, this guy is bad news, right? Ideologically, everything. And people are focused on that while at the same time, more bigger things than that are happening in the global economy, spiritually, physically. And to me, that's just the distraction.
Yes.
Because you know what? If you're bad enough, you're not going to make it.
Right.
This is what people always have to realize. It's like distraction. And so the things that we're talking about economically will actually impact you for the rest of your life.
It will, especially as we're, talking to a lot of our listeners. They may be at retirement or close to retirement. And so, what's going on financially, this is a really big deal. They don't have a lot of time to rebuild it.
Right.
And one of the things that you had sent us earlier was about a market collapse, and you had some graphs. Let's talk about that.
So first, and we've talked about this before, it was maybe a year ago, the difference between a collapse and a crash.
Yeah, right.
Right. So a crash would be like a car accident or like what I had on my bike
Right, yes.
last weekend when I got hit,
And you got hit by a car.
hit by a taxi.
Unbelievable.
So there's no
And
taxis
then
in Denver.
Yeah.
Not just hit, it was a hit and run.
It was a hit and run. Yeah, it's like, oh, the lack of respect for people
Yes.
and property. It's just common,
Yes.
right? But I got up, I made it. I'm
Praise the
vertical.
Lord.
That's really good.
I do
right?
think your guardian angel lost a couple of feathers there. Or
Yeah,
something.
probably so. But so you look at this stuff that's happening, and it is major, the things that are happening, right? So let's look at these things happening in the economy. I sent you 4 charts.
Yes.
And they're so important. So this first chart, money velocity, without getting into too technical on what that means, because I could bore everybody to sleep with it. But when you look at the velocity
Yep.
and that's down where it is, what does that tell us in general rule of thumb? Nobody around the world wants the US dollar. There's not velocity. There's not money changing hands. Like China's dumping it. Russia's dumped all the dollars a long time ago. They have nothing left. So the more that this stuff gets sold, the less there is to sell. Velocity is coming down. And then even in America, people are actually holding on to their dollars as much as they can, because what do we do? Do we invest? Do we go
Right.
into the stock market? Do we go into the bond market? Do we do anything? It's human nature to just hold back, right? It's like, I'm going to sit on the sidelines and do absolutely nothing, which could be a good thing to do, or it could be a very dangerous thing
Right.
to do, right? Because if you were to ask me 5 years ago, what should I do if I'm afraid that the stock market or bond market is collapsing, or real estate or whatever? It's like, sit in cash. Just sit on the
It's
sideline,
safe.
do nothing.
Yeah.
It's safe. Not anymore.
No.
Not with banks failing. Not with what we saw in Japan last week. The largest bank in Japan loses 21% of its total value in a day. Not in a year,
Unbelievable.
in a day.
Yeah.
That's what I was talking about. Things that happen far away impact you when you're
Yeah.
sitting there in Decatur, Illinois or something.
Right.
Right. It's like how does Japan impact me? Well, these things do.
They absolutely do. And what happened in Japan to me is the outside of central bank digital currency coming, I think it's the biggest thing to hit our financial world ever.
Man.
Ever. And it's like, what do you mean? It's just Japan. Some banks failing. Well, when they decided to raise rates 1/4 of a point, they didn't actually do it. It was the announcement that caused banks in Japan to fail 10 to 21% in a
just
day.
the announcement.
The announcement.
Wow.
The U.S. stock market, the Dow Jones Industrial Average come
Yeah.
down like 780 points in a day, right? It was based on that announcement, because over the last decades, we're talking decades, Japan having 0 interest rate, policy.
Yeah.
People that were smart, hedge funds, countries, whatever, they could borrow from Japan for 0 and just invest it in like a U.S. Treasury at 4.5%. That's risk-free,
Right.
technically.
Yeah.
I wouldn't say it's risk-free anymore, but that's what a normal advisor
That's what it
would
looked
tell you.
like, yeah.
So to me, that yen carry trade, which has been the global financing arm for everything around the globe for decades, $20 trillion worth is about to go up in smoke. Wow. That happened on the announcement. Imagine what happens when it really does happen.
Yeah.
Because it's going to. We can't be Pollyannas about it and think, oh, they're never going to raise interest rates in Japan. No, they have to, because they have to save the yen. So this is a big deal. So we've got that chart that we're looking at, right? We've also got...
Can you break down the real quick, just for some of my relatives? Yen carry trade. Yen is the currency
Japanese
they
yen.
use in Japan. So it's not like a dish or
Yep.
some kind of a sushi roll. That is their currency. So
Correct.
explain that phrase real quick. A yen carry
trade.
Explain that.
So people, it's like an arbitrage type thing. So if you can borrow at 0, take that money, which basically you buy the yen at 0. Now they're carrying this trade, for example. You're holding it, but that money that they give you, you can put in anything else. You could put it in gold, you could put it in silver, you could put it in U.S. treasuries, you could put it in real estate, you could put it in whatever you want, right? So the difference then is the benefit that investor gets from borrowing at 0.
Okay.
Now, what made this so problematic is when they did raise rates and all this yen carry trade is out there, people got margin calls. They were forced to sell everything, to make sure that the banks didn't lose money. This is why gold and silver came down during this time frame as well, because people were calling me off the hook saying, Kirk, you always said gold and silver goes up during times of chaos and And it came down to, it's because of the margin calls. People were forced to liquidate by their brokers that had paper versions of it, ETFs or whatever.
Yep.
So then that caused the price to come down. But we always have to say, fundamentally, did anything change? Nope. Nothing changed. We still have unsustainable debt, the political pressures, all that stuff. So it's going to go up. So to me, that is a buying opportunity.
Definitely. And it didn't, like, compared to everything else, it just came down a little bit. Compared to everything else that made drastically dropped.
Percentage-wise, just a little hiccup.
It did come down a little bit. Not a lot of it, like everything else.
Right.
So here's where it's safety, right? We keep
But it came down to where we were dreaming of it being 6 months ago.
Yeah, we were all
I
like, oh my
know.
gosh, can you imagine if it got to that?
I know.
We're like, can you imagine silver got to 26?
Yeah.
I mean, it came down to like in the 26 to 27 range. Remember 4 months ago, we were excited when it got
When
to
it broke
22.
25.
Yeah.
Oh, yeah.
Yeah.
Then when it broke 25,
so, I mean, we're
we
still
were like, oh my gosh.
$4
Yeah.
over where we were 4 months ago. And it's like, this is just a great buying opportunity.
Definitely.
I just want to drill into that one step deeper because people tend to think, and I say people, kind of referring to myself, like, okay, well, the Japanese currency, that's affecting people in Japan, that they're doing it. But with what you're saying, it might be, I mean, this is, I'm throwing this out, tell me if this is even true, but like a policeman's retirement fund or something, in Iowa could have, that fund that they've invested in could have been buying the yen and investing it in real estate or in other things. Like people all over the world were buying the Japanese currency and then using that money to buy other things.
Hedge funds, big banks, pension funds, insurance companies, all of them would use this practice. As would you and I.
That's why it affects everybody all over. It's not like you're isolated.
As would you and I, if we could, right? Because people ask me this all the time. It's like, Kirk, boy, with what gold and silver are doing, they're growing so much. Should I take a home equity line of credit at 5% and invest in gold or silver, which is growing like at 30%? And my answer to that is, I understand the philosophy behind it. That's the yen carry trade. But my goal is to get out of debt.
Right.
It's like never add debt to invest in something, even if it does grow. Because what happened with these people that bought the yen? Margin calls.
Yep.
They now had to sell at a loss, right? You never want to go into debt to invest.
That makes total sense.
Yeah.
Okay, so we had the first chart. Let's look at another
Or
chart.
impress your neighbors.
Yeah.
Yeah.
Or impress your neighbors, exactly.
Yeah,
Don't ever go in debt to impress your neighbors or impress anyone.
That's the kiss
Or
of
impress
death.
yourself.
Yeah, exactly.
Yeah.
True.
So look at this next chart. This just is a real quick one. It just shows how overvalued the S&P 500 is, how much the stock market is up. It has gone up. So there's two reasons why things can go up. Fake money input or real money input, right? It's just the stock market is a function of revenue.
Okay.
They don't care what kind of revenue it is whether it's people spending like you and me going to Best Buy or whatever and buying stuff, causing that stock to go up, or stimulus money.
Okay.
We are not spending any money. America's tapped out. So therefore, this chart that we're seeing is stimulus money that's drying up. And this is why it's such a big deal, because the Japanese yen carry trade, again, I don't want to keep harping on it, but that has been the liquidity for markets around the globe for decades, $20 trillion worth. That's drying up as the yen, now Japan is going to have to raise interest rates.
Wow. Okay.
Okay, next chart. So I think there's 4 of them on here. How do we know that this has been stimulus money that's caused the stock market to go up? Look at the federal debt.
Oh, man.
I mean, where does that money go that they print? It goes to stimulating economies and markets that should actually come down, or paying for entitlements, Social Security, Medicare, defense budget, everything, right? They are printing money like there's no tomorrow. You can't even find on here, normally a normal chart would have 2 steps forward, 1 step back, 2 steps forward, 1 step back. There's no 1 step backs on our federal debt.
And eventually you have to pay the piper. I mean, eventually.
Do you?
No, I think the piper dies, right? So I don't think you have to pay the piper on this one, or else they would have times when presidents come and say, we've got to pay off this debt. And you would see downturns on this chart where the debt is coming down. You don't ever see, you might see sideways, but you don't ever see it coming down.
So what does that mean the piper dies? The dollar dies?
The dollar dies. America dies. We lose our reserve currency. We get rid of the system as we know it. And this is why I think we're so close to that precipice, central bank digital currency, of this is how we're going to fix the system. We're getting rid of paper money as we know it. We will get rid of that debt. It's now just a debit credit system. And people are going to be excited about that message. But here's the danger in that message. You give up all of your freedoms. You know, as I'm looking at your books on the shelf here, it's like so much of it is about freedom.
Yep.
You get rid of all of that. Because when they have the ability, like we've talked about maybe 30 times, to cut you off from buying, selling based on your ideology, that is a loss of your freedoms. That's what comes next. That is their solution.
So is it kind of like where people get scared? It's their money. Like, how am I going to be able to take care of my family? So then they're willing to do whatever for the government to take over. Kind of like maybe the Patriot Act after 9/11, where that happened. Everybody's like, I'll give up all my rights. You know, whatever, you can do whatever you want to do, you know, to protect this country. Is that kind of what it's like here with the CBDCs?
That's what it's going to be like. And so you two are very well versed in the scriptures. You know Revelation 13, where it talks about the mark of the beast. No man, woman, or child can buy or sell unless they have the mark, right? So imagine you know that scripture and you're retiree. And all that you have for income for the rest of time until you die is your Social Security. And the government says, David and Stacy, we realize that you're in retirement. If you want to receive this government money, you have to participate in the Fed Now app. You have to be part of this beast system, or else we're going to cut you off. You aren't going to receive any money. What would you do? I mean, I'm not asking for an answer, right? But this is the question,
that's the question people
that people are going to have to answer all the time. And you're going to have so many believers that understand this is the mark of the beast, but I need to feed my family. I'll just take it and ask for forgiveness later kind of a thing, right? I want to encourage people to never do that.
Right, exactly.
Right, because God will take care of you when you're faithful. He's never going to put us in a point where we have no choice, where we, you know, so just don't. We don't want to take that. The Bible is clear about ramifications of these things,
that is
right?
huge.
Yeah.
It takes me back to when David and I were newly married, and it's been our whole marriage now 31 years of that nothing outside of God is our source. Like, you know, companies that we worked for, you know, even though the paycheck was coming from them, David would always remind me, they're not our source. God is our source. And so even when we've come to what we've seen with COVID and people being like, man, do I take the vaccination? I'm going to lose my income. What about my money? All of these different things. Do I take it? It was like, that company is not your source. If you decide that you're not going to take that vaccination and you leave that company, then God will provide for you because he's your source, never that company.
Always.
It's just interesting. When we woke up to a story this morning of, and I didn't really watch the Olympics, so I was kind of caught this story. There's a guy named Noah something. Anyway, he won a gold medal in track and field, testing positive for COVID, which is interesting because it's like, okay, we just shut down the world for this pandemic. Most people, if you're watching, kind of ask yourself, how many people, you know, died at home versus in a hospital?
The hospital.
You know, remdesivir, a lot of these things came out, you know, over time. And they come up with a vaccine to protect you from something. If you take this, it will not transmit. You won't ever get it again. Now we have a president that's gotten COVID 3 times since his vaccine. And a guy just won a gold medal testing positive for COVID, not wearing a mask, running with everybody. It's like, and I could be off on some of the details, and maybe they went through this protocol. Maybe he didn't test positive for after, but he'd been sick all week. But I'm like, we sort of had this level 10 agreement to do whatever. Like, I'll take this experimental medication so I can go to a football game. I want to visit my kids in college. You know, like, we gave up a lot. There's a lot of freedoms, freedom of speech, freedom of religion, all this stuff. But the first basic freedom is my body. And choosing, you know, if I came to you and like, hey, Kirk, try this. You're like, well, what is it?
Yeah, you're not going to.
If we're just eating something, I mean, hey, take a scoop of this, try this. Well, what is it?
Right.
I'm not going to tell you. Well,
I'm not going to take it.
Before I put something in my mouth, you tell me what it is.
Right.
You know, is it spinach dip? What is this? You know, is it blue cheese? You know, like you'd want to know. That's one of the most fundamental things. Before I open my mouth and you put something in there, like, tell me what it is. What's the bite of? And that's just, we're talking peanut butter versus spinach dip. You know, this idea of my body, and people, we shut down a country, lost massive amount of middle America, businesses, small businesses, you know, the independents, the Costco's and those did fine. Amazon did fine, but mom and pop businesses went down. And all of that was, we'll take whatever you want to put in my body They don't even want to tell us what's in it for 75 years. It tells her, but I'll do it if I can just go to the football game.
Yeah.
And so when we're
And
talking,
this runner in the Olympics
yeah, and a guy
still participated,
guy wins
even
a
though he
gold
had
medal.
COVID. Yeah.
I mean, he won a medal. So was it that bad? This COVID is the main example throughout history where the fix was worse than the problem.
Yes,
for sure.
exactly.
We saw Joe Biden test positive for it in Las Vegas, and I watched him get out of his limo and get onto the plane.
Without a mask?
He had no mask. He's with his security and shaking everybody's hands as he get on the plane. I'm like, where's your 2 masks, man? You know, it's like there was this. We treated it as something, and I'm not minimizing it. And I've obviously for a lot of people this was a big thing, but we're talking about something with the smallest amount of discernment. You could wait out,
Yeah.
and say, I'm going to bide my time on this a little bit. Now,
So this too shall pass.
This too shall pass.
Right.
But when you're talking about somebody's Social Security check and they're on a fixed income and you got to get it, like that's at scale, many magnitude times more serious than what we experienced with the pandemic. Because it's like, oh man, I'm barely making it now, and you're telling me I'm not going to get that. I mean, how do we begin hedging against that in advance as a preemptive strike? I want our listeners to be the smartest, most educated, have the best conversations in the church foyer, at the water cooler, wherever they're at, and be a source of hope in those conversations. Right. And so hopefully, they're going to take what we're saying today to heart.
I hope so. It's like when you read through the scriptures as a kid and as an adult, it's like, who in the world would believe the Antichrist? He sounds so bad.
Yeah.
Right? It's like,
Exactly.
how could this even come to pass? Well, something as simple as what we just talked about, I see how that would be easy.
Yep.
You just snooker people into doing something, right? Because you create a crisis that's so bad that people will now want your solution.
You're right.
That's where we are.
Yep.
So how do you get to that point? Everything that we've been shouting from the rooftops for so long, tangible assets get you out of that paper system. It gets you away from that digital currency. It gets you away from that oversight and the complete intrusion on your privacy and everything. And it's not only is it a good investment that's growing a lot, it's a way to protect your freedoms. I mean, look at this chart of gold.
Yeah.
Right. So what does that tell me? It's like people would say, well, Kirk, it's near an all-time high. Should we buy it? Well, it depends on the fundamentals. What caused its growth? Unsustainable debt, political pressures, chaos, uncertainty, change, all this stuff, right?
Yep.
Has any of those things changed? No. So therefore, that's going to continue to go up. But that chart is a reflection of people's perception on what they trust or distrust. And people are not going to start trusting the government anytime real soon.
No.
That is going to go up. There's imbalances in the economy. So why would we not then go into gold? I get this question all the time. Well, because silver's outperforming. Simple as that. If something's equally as safe, and I would actually say silver is more safe.
Is it because it's used for more things?
Yeah, it's used for more things. Exactly right. It's not just a financial metal like gold, central banks buying it to back their currency. Silver actually has industrial demand. So it will act like gold in that financial capacity, but it also is used for so many things, right? So therefore, you've got an extra built-in set of demand for it, which makes it more safe, in my opinion.
So you actually sent us an article about the industrial demand, and then in that article, it says something about 2025 that we might not have silver.
Right.
Can you talk about that?
That's a great article. Let's go over it. So this was in the Jerusalem Post, this article. So industrial demand. We're not even talking about investor demand. Industrial demand for silver gone by 2025. So as a firm, this is what we do, right? We're calling the depositories every day, locking in millions and millions and millions of dollars worth of silver for people.
Yep.
They're running out of certain things, like 1,000-ounce bars we never know if we can get. So we haven't done them in forever. But when we moved to Texas, from our relationship there well over a year ago, we have an amazing relationship with the Texas Precious Metals Depository and the refineries, right? So we can get 100-ounce bars for the same price most people can get thousands.
Wow.
That's price per ounce.
Price per ounce.
Yeah.
That's what happens when you become really big.
Yeah. That's huge.
I mean, we're a big company.
Yeah, you are.
But we don't, it doesn't feel like it to me. We don't act like it because we're so focused on relationship. But so that's why we do hundreds. So look at what silver is used for. So the industrial demand, various high-tech industries, they're skyrocketing, like electronics, photovoltaics, which are solar panels.
Okay.
You've got defense,
Electric vehicles, which they're pushing down everybody's throat.
Yeah, so defense and aerospace are massive users of silver. I mean, you turn on the news for any 5-minute segment, and you're going to want to put your head in the sand thinking, is there war everywhere?
Right.
Yeah.
Yeah,
I mean,
it's
seems
War,
like
rumors of war everywhere.
Yeah.
everywhere.
So these missiles, these torpedoes, each take about 11,000 ounces of silver. And it's not like when that blows something up to smithereens, right, that you can go back and reclaim it. It's gone. It's not like aluminum that you can recycle.
Right.
Once silver is used, it's done. You can't reclaim it. So you've got all of that demand side of the equation. Now you've got the supply side of the equation, meaning the mines. And what is up with the mines? All the easy silver to be found has been found. So you're going to have to go deeper into the earth, deeper into the jungles, build bridges, build roads, get permits from governments who might hate the stuff, right? So it's running out. And the projections are by 2025, it will run out. So here's where it's so exciting for every one of the flyover viewers who has actually allocated into silver over the years. It's like when this happens, this is what we've been waiting for. Because I'm not concerned about silver running out where manufacturers can't get it.
Right.
Why? Because higher prices will shake out inventory.
Sure. People will sell.
From people like you and me who own it.
Right. We're like, okay.
Right? It's like, all right, well, it might be $30 an ounce. I'm not selling. I want it to go up.
Right.
But then Sony needs to place an order to make their LED TVs and their flat panels and everything else, or the Department of Defense saying, we've run out of missiles.
Right.
We're going to need more. So then they start offering higher prices, $50 an ounce, $80 an ounce, $150 an ounce, $200 an ounce. It doesn't matter, right? So it doesn't matter with the government because they'll just print their way out of it, right? They'll just pay whatever. It doesn't matter to Sony because there's a couple ounces of silver maybe in an LED TV. I don't know how much, but it's small.
Right.
Well, they'll just pass it on to the consumer. So here's where when we own what is needed, we get to make bank on that pretty much. This is why people invest with wisdom, with discernment, with sound mind, right place at the right time. This is where we're at.
Man, that's
So
huge.
let's talk about silver from A to Z. I got some examples here because this is something that this is 100 ounce. It's
That's
heavy.
heavy, by the way.
It's dense.
It is.
That's a 100 ounce. Like, here's 10 ounces silver. Here's a 1 ounce coin. And there's a whole package of these. So a lot of people have never purchased silver as an investment.
10?
These are 10. So they come in lots of depending on what's available, I guess, at the time. So these are the displays that we got here. So these are all 10s, and you could get a 10 that looks like this. You can get 100. You can get slightly less than 1,000 ounce. It's like a loaf of bread. So when you look at these different things, let's walk this through because a lot of people are like, where have I ever seen silver? I got a piece of silver jewelry. When I invest in silver, what does this all look like? So let's go from A to Z. From the ground, what does it take for me to be holding this? When they're digging around, do they find, is this how it looks? And they just chop off a block of it like you're getting blocks of ice out of the ocean? Like how do you...
No, it's not like the movie Frozen.
Yeah, where they're sawing off blocks of ice, Where does this come from and what does it take to get it? And then I guess juxtapose that against what people think is money, which is a piece of paper that's just in the computer that the government says, oh, we need another trillion of these. Every quarter they're making another $1 trillion.
Yeah.
We used to always correct people in business because they'd be like, I want to make money. Well, you don't make money.
No.
Only the government can make money.
Right.
They just manufacture it. You have to earn. You have to earn money by increasing your value to the marketplace. If you want to make more money, find a problem and then solve it.
Yeah.
And most people that have created wealth, people had trash. Like, you want to develop a company and we'll go door to door and pick up their trash for them, solving a problem, increasing your value to the marketplace. If you got a young kid and he's working at a warehouse, I want to make more money, well then crush your current job. Whistle while you're doing it, show up 5 minutes early and stay later if there's an opportunity. Make yourself invaluable, start learning someone else's job while you're doing this one, and don't worry about getting paid for it. And then they're like, man, we can't make it without Bob. You know, it's like you increase your value. They do not want to let you go. You know, you're the last person because you have so much value that you bring there, and then other people are offering you better jobs. That's the economic ladder that America's kind of based on. So
correct.
So you have to earn money. Only the government can make money. So let's position, where does this come from, and how does it compare to what can be just printed in the sky, and why is this
so
different?
valuable.
Yeah.
And why is it valuable?
So I'll start with the paper version first, right? So when the government needs money, they just decide we need money.
Yep.
And then they take the paper, they turn it into cotton or whatever, and they make it into a crisp-looking bill, and they put it through the printing press and make as much as they want. But there's still a process to that, right? You have to find the trees, cut down the trees, make it into mush to make it into paper, right? So that's what happens. Digital, where we're going, is even easier because all you have to do is have some nerd with glasses like mine. Told I look like a nerd. It's like, sweet, that means I'm smart.
No, you mean like a doctor. Is what
Yeah,
you look
that's
like.
right.
Yeah.
So all they do is press the button a bunch of times on the computer, add a bunch of zeros to the money supply, boom, it's done. Less than a second.
Wow.
Very little work in that. This is why digital money is more dangerous than paper money even.
And paper money at one point was backed by gold and silver
Yes.
in 1971. That all changed. Is that
Well, go a little bit farther back. So the Federal Reserve Act of 1913 got rid of any kind of gold backing for consumers.
right? Okay.
Right. So back then you could go to Sears or whatever was around, right? And use gold or a $20 bill. 1 ounce of gold equaled $20.
Okay.
So then when the Federal Reserve Act came,
And that was
no
1913.
more. That was 1913. No more consumer use of gold. You couldn't use it anymore, right?
Okay.
And they confiscated it in the 1930s.
Wow.
So then you could still use gold for international settlement if you were a country.
Okay.
And this is what you referred to. Nixon closed the gold window completely in 71 because France wanted repayment of a debt, and they said, we want gold. We don't want your stinking dollars.
Okay, because they knew.
Yeah, they knew that it stunk,
Yeah.
right?
Back
and
then.
so,
Phew.
yeah. So Nixon gets blamed for all the inflation that we have, but I understand his rationale. It's like, no, I'm not going to give you our valuable gold. We'll give you back stinking dollars, right? So close the gold window altogether so we could keep it. Well, that caused massive amounts of inflation because now there is no backing of our dollar except until 1973. Then the petrodollar, we started backing our currency with oil.
Okay. Yep.
Now that eliminated January of this year when the OPEC nations, most of them started, to be members of BRICS.
So 51 years in a row, we had an agreement with OPEC that was going to be the exchange, and then that was sort of what established a stability to the global currencies, with the U.S. being the gold standard.
Yeah, monumental decision. When Kissinger in the 1973 said, "Hey, Saudi Arabia, well, you have to trade in U.S. dollars in exchange for oil." Great. That spread to the other OPEC nations, built-in demand for our currency in exchange for military protection.
Okay.
That was the trade-off. So now with BRICS, you've got China, you've got Russia, big militaries. These OPEC nations don't need U.S. military anymore. So they just went there. Right, so this is why it's over.
Yeah.
This is why it's game over. But that's real easy to create digital money. Now, how do you create this?
Now, can Joe Biden or whatever president write an executive order and create an extra 1 million ounces of silver?
And I just wanted to say this because I know people are going to be listening today saying Joe Biden is not the president. It's just he is. We know that he's squatting in it. We know that all those different things. You're just saying
the administrative state behind him, but the president signs the paper.
Yeah.
That somebody put in front of him and handed him the pen. So can he just say, because they could add another $1 trillion. They do it every 90 days. Could he add another 1 trillion ounces of silver?
No.
Because it's like, hey, boom, bippity boppity, poof, we got more silver.
I mean, he can say that he wants to, but it's not going to be there. Right?
Because tangible.
It has to be created.
It's such an obvious thing, but I think most people miss that. That's why I keep driving this home. This is a thing. I can touch this. They can't just be, poof, we have 1 million more of these.
Correct.
You can't just print them. You can't, do a 3D printing of them. Or this is a real thing.
It is a real thing. So how do you get there? You've got to have like satellites and all this testing, and they detect geological formations in the earth and say, okay, this looks like a good place for a mine. Then they get the miners, they pull the permits from the different countries, which most countries don't give them right now.
Yep.
So then they go in, they dig miles into the earth, they try to see where can we find this strand of ore. Then they start pulling it out, they put it on trucks, they drive it to the refinery, they chunk it off, they melt it down, they purify it so they can make it into a coin or a bar.
Okay.
Right? So that's the whole process. But getting to that point is very difficult. It's not like you can say, ooh, we think that this part of the mountains in Nevada might have silver in it. Well, it takes like 10 to 20 years, literally, new estimates to open up a mine to production.
Wow.
So you have to deal with what you already have.
Yeah.
And they have to be really confident that there's something there. Imagine spending 10 years and it's like a dry well, right? It's like, what?
Like some of these pictures are showing,
It's a big deal.
Yeah.
Now there's very, very, very few exclusive silver mines in the world.
Okay.
It's a byproduct of copper mining.
Okay.
Because the silver strands and the copper strands tend to run together.
Okay.
So copper mining copper is an industrial metal used for plumbing and everything else, right?
That's people in Detroit, they steal their air conditioners.
Yeah. So what we're seeing though is with the global economic slowdown, the copper miners are shutting down. So therefore there's not as much silver production coming out of the earth either. So this is the problem moving forward, is we don't have the supply. And even if they wanted the supply, same thing goes for a gold mine. It's like it's going to take a decade to get something operational. And a lot of companies don't want to take that risk because what if the geological surveys are wrong?
Right.
What if we find something and we're expecting this vein to go down deep into the earth and we could mine it for the next 40 or 50 years and it turns out it was just surface level and they're done? I mean, there is a huge risk into opening up new mines, which is why I'm not concerned that they're going to open up new mines, that there's all this gold that's under the Vatican or some ancient Chinese city and it's going to come in and it's going to impact the price of gold. It's like, you know what? All the gold ever mined in the history of the world that's known will fit into the size of 2 Olympic swimming pools. Whoa. It's not like it's that big of a market. Now, it's very, very valuable.
Right.
And when you add the depth and the length and the width of I mean, those are big. Those
sure,
are
they
big
are
faults,
big,
right?
but still, all of it that's been mined. Okay, let me ask you a question. You had said 1913 with trading with silver that you used to be able to do that. Do you think that's going to change? Because they stopped that in 1913. Do you think that will change in the future?
Yeah, because I think that the system that we know it's broken. People are realizing it's broken. The entire system globally now has been based on debt, and people are waking up to that. It's like we've got so much debt that it's impossible to pay it back. So to kind of put it into perspective, how much stinking debt that we have, 1776 to 1980, when Ronald Reagan took office, that's 204 years. We went from zero to $900 billion in national debt.
Okay, to Reagan.
From Reagan to Obama, we went from 1 trillion to 11 trillion in national debt.
Wow.
From Obama until now, we've gone from 11 trillion to like 38 trillion. Right? So the debt
it's a hockey stick.
It's a hockey stick.
Yeah.
And now you can add debt incrementally, but you can't add debt exponentially. Wow. And that's where we've now come to this point of critical mass, which is, like we talked about earlier, it's time to pay the piper.
Yeah.
Well, the piper, you can't pay the piper. There's too much debt.
It's too much.
So the piper just needs to die, or you just need to reset. You just need to file for bankruptcy, call it quits. But when you file for bankruptcy as a country, saying we're not going to pay off any of our debt,
what's that do?
well, it makes everybody mad at you
what I was
that's
gonna say.
invested.
Yeah.
And
Because they lose.
Yeah, and some of the people that have invested in U.S. dollars are like China, they're nuclear power, other countries that are nuclear powers. It's like you create geopolitical conflict and war when you start to steal that much. Mm-hmm. But ultimately, every country will run out of money. Like Ukraine did. Ukraine just decided 2 weeks ago, it's like, we're not going to pay off any of our debt to foreign holders of it.
Wow.
I mean, it's just by decree. Well, it's going to tick people off.
Yeah, it is. So it's
right?
not just Russia.
Yeah.
It's going to be a problem.
Yeah.
Wow.
So the thing I've liked about silver, and this one of our shows, we'd always had this allotted. We're going to take a piece of everything we make and move it from fake currency to something tangible monthly. But when I understood, one day we're talking about like what's the bottom of it, the floor, because blockbuster stock, it was one of these episodes of this sitcom we played one time. This kid inherited 1 million shares with a blockbuster stock or something, and it's like, yeah, it's worth nothing. Yeah, a lot of things have a really low floor, like zero. It costs, like we've shown pictures of guys mining. For them to get out of bed and go to work, they have to be paid and fire up the trucks and put diesel in the bulldozers and whatever. I don't know exactly what all goes into mining this stuff, but there's a certain amount of cost that they're just not going to get up and go to work for. Yeah. If it's so, in one of our shows, you said it costs about $18 an ounce to get it out of the ground and turn it into this.
Right.
And so, if they just stop going to work, that price skyrockets because then the supply is cut. So it made sense in my head in a real teeter-totter kind of way that of all the things we can touch in the whole world, I don't know that Apple or any of these companies have a floor of a certain amount.
Well,
I know they got a floor of zero for sure.
Well, so they kind of do. Like if you follow Warren Buffett, what kind of investor is it? He's a value investor. He looks at the book value of a company, the actual hard cost of all their plant, people, equipment, product, everything, right? And it's like, okay, all the inventory, the buildings that these companies have, this is what they're worth. Well, most companies on the stock market trade for massive multiples over book value. Right. So, but when a company goes bankrupt, they go into forced liquidation. Even if they had something of value, it could be worth absolutely nothing. So even though people think, well, they've got a lot of equipment. So,
right.
Yeah, but in the bankruptcy, in a bankruptcy court, the judge is going to say, well, you're going to pay you back at 2 cents on the dollar. Yeah. Whatever. So silver is different in the sense of it doesn't sell for huge, massive multiples over what, like a price to earnings ratio, like a stock would. It is what it is. If it dips below what it cost for miners to take it out of the earth, they will simply shut down operations. That number estimated right now is in the $19-something range, with the cost of diesel fuel, equipment, insurance, people, permits, all land, everything, right? So $19-something per ounce. Well, we're at 27, let's call it. So that's pretty much your floor. If you go too much below that, miners shut down, and then what happens? There is no supply coming out. And so when there's no supply and equally high demand, ultimately the prices are going to go up. The mines will open up production again, but they will shut down if it goes too much below that cost of acquisition.
And that's where you got the medical equipment and TVs and military equipment and all these government forced mandates for solar panels and all these kind of things. Electric cars. It shoots it up. So we're talking A to Z. We made it to like B or C. So how did this get here on my table? Like what places could this have touched in the process? And someone like yourself, are you calling the guys that are drilling it? Is there like do you get gold bars at Costco?
You can get gold bars at Costco, right? So that's ultimately.
So is that where you get them?
No.
Do you go to Costco and then bring them back to your office and charge something for your handling?
No, we go directly to the depository, directly to the source, right? Cut out all the middlemen. So once these things are made, the depository will actually contact basically the refineries. The refineries work with the mines. So the mines send their product, their raw silver, to the refinery. The refinery makes it into something that the refinery then sells it to the depository. The depository sells it to us.
Okay.
Right. And that's how you ultimately get it. So whether it's us or any other dealer, gold, silver dealer that you see on podcast everywhere, we all get it from the same source, right? Nobody's going directly to the mines. They go to the depository system. So now some companies may pull stuff back. If let's say you had silver and you sold this to me. So if I had an inventory, I could pull it back into my own inventory and just sell out of that inventory. Well, I don't know where you got it.
Right.
Well, what if it's lead and it's just silver plated and
Right.
I then sell that to somebody else? There's not, to me, when somebody sells out of their own inventory, it's not safe. So that's why I never have had an inventory. I deal directly with the depository because they have all the testing to make sure everything's real,
Sure.
that it's authentic, that it's not phony baloney stuff, right? So they drop ship from the depository. When you want to sell it back to me, well, then I give you the shipping instructions to go to the depository so they can test it on the way in. So everything is authentic. So that's where the process comes in and all the different players. You've got mines, you've got refineries, you've got depositories, you've got the dealer like us or anybody else, and then you.
Okay.
So that's how it works.
Okay, so there's a lot of people in this space. You know, there's, when you drive around, you see a shop. We buy gold and silver. They sell stuff. Like, I'm not sure exactly what those guys do. I've not been in one of those. I was at an event and there was a dude selling collectible things, and he had everything from like, rare like trinkets, and like bullets that were like from different wars and, all kinds of different interesting things. One thing he had was this. It's 2 ounces of silver with a picture of Donald Trump on the front, and it's
Which
like
is cool.
a vendor table. I'm like, that's kind of cool because there's not very many of those around, and maybe like 50 years from my great grandkids or something be like, it's kind of funny,
Yeah.
Remember this guy? It'd be like having a Lincoln or something, whatever
Right.
in the future. This was not something I did as an investment. I bought it because I thought it was
Right.
if anything else, funny.
Because it was way over what you would pay for silver.
I paid about double per ounce of what this would be.
Right.
Actually, I paid quite a bit more than this. So this was $80 an ounce. But here's my point in bringing this up. This is a 1 ounce silver coin that is like, say, worth $27.
or $30 or whatever.
$30
the price is.
or whatever the price. One reason I'm so passionate about this area is because it's not just Stacy and I. My kids move fake money into silver.
Yeah.
My in-laws, everybody that I can have their ear for a minute. It's not about our relationship or anything else. I literally lose sleep over the idea there's not enough of our listeners protecting themselves from this. Like, we're headed to a winter and they're like, I don't need a coat. And I know it's tough out there, but I still look at people. I'm like, man, if you've bought soda, if you've donuts, if you bought anything,
Coffee.
we're getting coffee, like, you could save up enough to buy an ounce of silver. I'm sure in people's budget on cigarettes or subscriptions on their phone to Candy Crush or whatever, they probably have spent $27. So if you do that once a day or once a week or whatever, over the last 3 years that we've talked about this.
Or realistically, because you say, like, when you get it from the depository, you really need to have about $500. Is that
Just 'cause
right?
you're gonna ship it.
Because
Yeah.
of the shipping and all of that.
Because they ship it for free.
Yeah.
Right. I mean, technically you could buy 1 ounce, but I want to be fair to the depository because they do such a huge service and they ship everything out for free overnight.
Yeah, that's amazing.
That I don't want a nickel and dime. I don't want them to lose money by doing
Which
good.
makes sense. So even $500.
So $500, I
Yeah.
would say, if you don't have $500, then just save up
it.
until you do. And now, if you're going into gold, well, it's like $2,700, right? It's like, because we're not going to cut it in half of the hack.
Sure.
Now, you'll have people say, well, I can sell you a 10th ounce gold eagle, quarter ounce, half ounce, and I can get gold in smaller increments. Those, every time you go smaller in size, the premiums rise. And my goal in allocating people into metals is minimize your cost per ounce.
Right.
Right. Don't maximize it.
Right.
Don't
Don't
buy
get
these.
something.
Right.
Yeah, I mean,
This is the perfect example.
That is a perfect example. Now, it might
But I
look
love Trump.
cool and
It's
it's
got
kind of
Trump
cool.
on there.
I love Trump
It's
too.
not
and
worth
that's-
$80 an ounce.
No, in fact,
You wouldn't be able to sell it for that unless it was just like something
No,
like it was
and-
so rare.
But
or
here,
something.
I want to hammer in the story though. When I've had it several times at live events where and some of them are just basic stories where people paid a certain price per ounce because they were buying a story coin. There's been multiple times I've stood in front of somebody that's at retirement age and literally tears coming down their face, like, how am I ever going to recover? What they bought it from some dealer and did not get the best price per ounce. Now, eventually, over time, it probably will go to that, and then they're just a break even.
yeah.
But one reason I hammer this is because it's it's not an industry that people understand real well. And there's a
Kind of
difference.
like buying a diamond or something.
Yeah, or buying a computer, or buying a used car if you don't know. Or, it's like there's a difference between buying this coin with Trump on it and buying bullion 1 ounce.
Right. So let's say you bought this one for $27 an ounce, and you bought this one for $80 an ounce,
Which I did.
and you wanted to sell it. What is the price difference? You're going to get about the same price as this, about $27 an ounce.
Because that's what it's worth.
Yeah.
Yeah. So what happens with that $53 difference?
Ooh.
It just goes away. So will you ever recover from this? Yeah. Once silver hits $80, you're basically
broke
at break even on this, where this one would be up $53.
Right.
Right.
Yep.
So it's like never overpay. Now, because this is worth basically this, I mean, you could drill a pretty hole in it and have a sick
necklace or something?
right?
Hey, maybe I could, because I keep this in like a little plastic thing. I'm just
Yeah.
going to have this in like a shoebox when I
Yeah.
die, and they're going through all my junk, and
Yeah.
they're like,
Look at that.
Now,
Grandpa White was kind of a kook.
now it's not wrong to buy those if you're a collector.
Right.
Everybody's different. Like you wanted it because it looked cool. And if you've got this collection, this is where I always encourage people, don't view a collection as an investment.
Right.
That's good.
Because a collection you're probably going to keep forever, pass it on to your heirs, and you don't care what the value is.
Right.
But if you want to invest, your goal is to buy low, sell high, make sure you're in the right place at the
Stacy's
right time.
mom has a whole bunch of precious moments, figurines. You know, I don't know what she could sell them for. She's probably never thought about it. She's probably never going to sell them.
Yeah.
She already knows who she's going to give them
Yeah.
to when she passes away.
It's that kind of thing. But that's not her retirement.
Right.
She didn't tie up her financial future in precious moments figurines. They're in a, what do you call them, a curio cabinet. They're on display. You know, I could attach this and have like a
That would be a
ring.
big ring.
I could
Oh,
be
that
like
would be big.
I could be like a serious Trump fan.
Big.
That's funny. So the bullion, this is the key, and this is all you sell. Is that right? Is
That's
bullion.
all we sell. We don't sell anything
Which is
else.
why
we feel
pro-
so safe.
use it as an avenue. Kind of people are going to
Yeah.
be safe. If I lose any sleep at night, it's not about people moving into silver
Yeah.
with you. It's about people not doing it.
Right.
So people think this is bullion, this is bullion, this is bullion. This is too. A coin can be bullion. It's just modern day issue, low cost per ounce. So even though it's a 1 ounce generic refinery round, it's still bullion. And so rather than doing this or a silver eagle or a Canadian maple leaf or something like that, it's all the same silver. Comes from the same refineries. They would just take this completely blank like a washer, right? No design on it whatsoever. The refinery's going to keep half of them, put their own design on it. They're going to sell half of them to the U.S. Mint where they put their design on it. And then whenever, like anything, whenever the government touches it, they make it more expensive and worse.
Right.
Right. So I would rather pay less cost per ounce, maximize my ounces.
Makes sense.
Yeah.
I mean, that makes total sense. Okay, so then what I like about working with you all is the percentage that, because obviously you got to make money. So you're going to pay a percentage up front for your costs, but not when you sell. And a lot of times when you're dealing with buying silver or gold, there is a percentage that people have to pay when they sell it, which now you're paying on gains.
Right. So like a realtor or a stockbroker, right? Most people are used to commission when you come, commission when you go, and they forget about you in between. This is where we are significantly different. We don't charge anything when you liquidate. Zero. Zero is zero.
That's
I
zero.
don't care if a $10,000 investment grows to $1 million. It's still zero.
Wow.
Where industry-wide, let's say the average is 4% when you liquidate on the back. It's actually more, but let's just say 4%. So you had $10,000, it grows to $1 million. Well, you got to pay 4%
That's
on
a
$1 million.
lot. Yeah.
That's a lot,
Yeah.
right? I mean, we're talking $40,000 in commission, right? Where I'd rather just pay zero. So the way that we operate is 8% when you purchase, 8% on top of the wholesale. It's not on top of spot price because every dealer buys and sells from the wholesale price at the depository. 8% on top of that, 0% ongoing, 0% when you liquidate. And to me, having been in this industry for almost 3 decades,
Man.
it's like it's clean, it's transparent. There's very few moving parts to any
Right.
of this because I want the client to succeed. People who sell that want themselves to succeed.
Sure.
Right? Because
Yeah.
the client won't.
Right.
Were you hating on Trump now?
Oh, I love Trump. I just wouldn't buy a Trump coin.
Right,
Yeah, you get Elvis or you
Yeah.
know, about whatever. Yeah.
That's really important for people to know as well. But what I also like about working with you is the relationship where when it's time to sell, let's say that now we're going to move to gold or we're going to do something else, you help walk through that process as well. It's not like, now I got to try to sell who am I going to sell my silver to? You walk through that process with us.
Yeah, since I don't carry an inventory, to me, when somebody wants to liquidate, it's just a few keystrokes to the depository saying we've got 872 ounces coming from Jane Doe, and they buy it like that. Why? Because it's a global commodity.
Right.
It's used for Department of Defense, for electric vehicles. So to me, there's always built-in demand for it. If I wanted to sell this, and you said, Kirk, I've got this 2-ounce Trump coin, it's like, well, I don't have anybody that's going to buy it. Let me make some calls.
Right.
Right. So then the dealer that you bought it from would have to call Jane Doe and John Smith and whoever, say, hey, have I got a deal for you? You know, I haven't seen these in a long time, but we have like 500 of them from this client. And so say, well, I'm not interested. It's like, yeah, now what? Right. So something like that, the dealer that sold them has to make a market for them most of the time. Something like these bullion, there's already built-in market globally.
Yep.
So it's really easy to get rid of.
That makes sense.
Yeah.
That is huge. And then again, you are an advisor. You have 2 PhDs. So you are an advisor to help us to know when a good time to move as well. So let's say that we're going into silver, but now we want to go into gold. You walk through that process with us.
Yeah, because right now we're in silver because it's outperforming. There's this historical ratio between gold and silver that says over allocate into silver because it's going to jump and outperform. And I think over the next 12, 18 months, it probably triples the rate of growth of gold.
Wow.
Because we're running out of supply.
Right.
It's as simple as that. So at that point, we'll say, okay, let's sell it. Lock in those profits, roll it into gold. Here's the simple math. Let's say silver triples the rate of growth of gold over the next year to year and a half. We sell it, go into gold. What did I just do? I got you almost 3 times as many ounces of gold then as what I could have purchased for you today. It's like if you could have started with 50 ounces of gold today, silver triples rate of growth, I get you close to 150 ounces of gold then. It's like, where did this other 100 ounces of gold come from? It's not magic. It's simply just math.
Yep.
We allocate it into one that's growing faster.
Let's talk about that ratio a little bit because that was another thing that kind of clicked for me one day. There's a ratio that you go off of that is how many ounces of silver does it take to buy 1 ounce of gold? It's historically been a certain point. It goes closer. It gets further. Where is that now, and what does that look like? When would that ratio be appealing enough to maybe make that move?
Oh, that's such a good question. So today it's about 88 to 1.
It would take 88 of these to buy this exact same size in gold.
And gold, correct. So historically, that number is 20 to 1. It would take 20 of those to buy 1 ounce of gold. So what does that tell us? That at 88 to 1, it says, well, either gold is overvalued or silver is undervalued. So then we say, well, what causes gold and silver to go up? Everything that we talk about, the political chaos, the inflation, the rising, all of that. So gold is not overvalued. It's going to continue to rise, which means the alternative now is true. Silver is going to outperform. So when it does, when do we get out? And so I'm never going to wait until the very bitter end to get rid of all of it because I want to lock in profits incrementally for my clients. So when we get to 60 to 1, you know, for the ratio of 60 to 1, that's roughly
61 ounces these for 1 ounce of gold.
That's roughly a 25% difference in the ratio.
Okay. I
will sell about a 30% of a client's silver and go into gold. Then when we get to 40 to 1, this is just how we want to do it. I'm going to sell, it's like a bell curve, right? I'm going to sell 40% of a client's silver and go into gold. And then we'll save the last 30% for whatever the bottom is. Whether it's 30 to 1, 20 to 1, maybe it overshoots, gets to 10 to 1. We don't know. But rather than waiting until the end, which we don't know what it's going to be at, I'm locking in profits.
That makes sense.
And in steps down. One at 60 to 1, one at 40 to 1. And by that point, we're out of 70% of a client's silver and into gold. So any new clients coming in during that time, they're going to have the same asset mix. They're going to be coming in at 1/3 gold and 2/3 silver, or 50-50, or whatever it might be. So I want all of my clients to be in the same percentage allocation that I'm in every step along the way.
And you've had it where, because you've been doing this, like you said, almost 3 decades, where you were buying gold and not as much silver. And then it changed to silver and then moving to gold.
Right. Yeah.
So it just depends on what's going on.
Yeah. I mean, I have people that call and complain that see shows and say, Kirk, silver was like $48 an ounce in 2011, and you keep saying that it's growing. It's like, yeah, but I never said I was in silver that whole time.
Right.
Right? So we lock in profits. Like from 2002 until 07, we were in gold. From 2007 to 2011, we were in silver. From 2011 until 20, basically, we were in gold. And then we've been in silver from 2020 until now, because where the ratio is.
That makes sense.
Right. So yeah, sometimes people look at charts and they think they can outsmart and say, well, like, no, it hasn't gone up like you said. It's like, and under our strategy, yes, it's done really, really, really well. So that's why in time, probably within the next couple of years, we will be 100% into gold again.
Wow. It's so interesting how it does it.
Yeah, exciting times. Now, the last kind of aspect of this, when I'm talking about this from A to Z, we got it out of the ground, it's refined, it's turned into this.
So what letter are you on right now?
Well, we're going to wrap it up, get to Z here.
Okay.
So people can have this and store it at their house, which is probably not super advisable. Maybe you want some around if there's a crisis or something like that, but then it could be stored somewhere else. And then there's also this opportunity, like, you said, how quickly it is to liquidate it. Like, you don't have to even touch it. Somebody may want to say, hey, I've put in retirement stuff. I got money there. I've done whatever, but maybe I want to put in a patio. We need $20,000 to do this.
Yeah.
It's a phone call in like 2 days.
What is the turnaround on that?
Of to do that? But where is the silver during that time, and how safe is it?
So we put it at the Texas Precious Metals Depository. It's not our company. We have no ownership of it. It's a third party. Because there's about 80 depositories around the country you could choose from. I wouldn't choose any of them, right? I would choose the Texas one.
Well, you did choose it because you were somewhere else, and you could go anywhere you want.
Yeah.
Why did you choose this one?
Number one, the technology that they have. When we do the ratio trade, they're fast. Like literally, we can get it done with a matter of days, where most depositories, it would take weeks. I don't want to wait weeks because the price would change.
Right.
Right? I want to do what's best for the client. Number two, they have unlimited insurance coverage on the account. Unlike FDIC or SIPC that caps out at like $250,000, I don't care if your portfolio grows to $10 million. It's 100% insured, revalued every single day at wholesale prices. The very key to safety. Number three, it's segregated storage, meaning if you had something stored at the depository, you've got your own box there. It's not like some allocated number of ounces into a big, large pool that they can use back and forth. So you have your own box. It's singular ownership, which is actually another huge, massive key to safety. So most depositories would have joint ownership, meaning you own it and so do they. So they could lease it out. They could oversell it. The same 100-ounce bar of silver, they could sell 150 times if they wanted.
Okay.
Well, that's fine in a bull market where nobody's selling, right? But when you want to lock in your profits and sell, unless you're the first gal in line, Stacy, they're going to say, well, boy, we've oversold it. You're going to put you on a waiting list. Well, that's not safe.
Right.
So singular ownership, segregated storage, 100% insurance. I've known the owners for decades operating in different political groups together. They think like us. They act like us. They're God-fearing people. And lastly, it's in Texas. This is pretty big, tangible, non-tangible, right? So you could have a depository in other states that might completely buckle to political pressure. Right. I'm not afraid of government confiscation because I don't think they're ever going to confiscate gold and silver again like they did in the 30s. I'd be more confiscated about your checking account, your savings account, where it's digital. Because only 2% of the population owns gold, only 0.9% owns silver. Why, if I were a politician, would I go after that small dinky amount? I wouldn't. So therefore, having it stored at a safe location that's 100% insured in Texas, that's very legislatively favorable towards precious metals. I mean, they want their own state chartered bank backed by gold. They love precious metals. So getting through the National Guard, everything else to get to that point, I feel safer with it in Texas than anywhere else.
That makes total sense. David had made the comment on selling. How long does it typically take if somebody's going to sell it?
Depends if it's IRA or non-IRA. IRA, there's just a couple more hoops, but we're talking maybe, I can lock it in right away. So you don't have to worry about the price moving.
Right.
I lock it in immediately. It just might take a week or so for the fund, not much more than that, to get the funds back. If it's non-IRA and in storage, 72 hours max.
Okay.
Right? Which is about the same as it would be selling a stock.
Right.
Right?
Yeah.
It's like things just have to move into the right accounts and then we wire you the funds.
That makes sense.
What if somebody said, hey, I want this back. I got this gold stored in Texas and things are crazy with EMP or something going off. I want the stuff in house. Like, can they go down there and touch it? Can they see it? Can you show your ID and physically take it back and say, I'm going to have this at home?
Yeah. So you can
What does
go
that
in.
look like?
We can arrange for anyone to go into the depository and look at their stuff.
That's cool.
Or they can go down there with their Ford F-150,
Load it
get
up.
everything loaded up, drive away, or we can simply ship it overnight.
Okay.
You just have to pay for the cost of shipping at that point, right? But it's all easy. If you're storing it now and you think martial law, blood in the streets, civil unrest, everything else, I want it at home, easy to do.
I'm
That's
talking
good,
kind of
too.
more the preppers out there or people, I don't know that there would be a reason to do that right now because it's much safer there than
Yeah,
it would
instead
be
of in
sitting,
your home.
Exactly right.
Yeah.
in your house or somewhere else. So, what are the types of people? And I get broad strokes, but maybe put them into buckets of people that are clients of yours that move into silver. Is there any kind of commonality between them? And then you got probably the people that are like, hey, we have a boat, and I don't think I want that anymore. So they sell it, and like I got $3,000. I sold my fishing boat, and I moved it. Maybe somebody that did something like that, or they sold a car, got some cash, or their uncle passed, and I've got $10,000. And I want to. You have that. You got IRA people. You got probably large income net worth people. Buying large amounts. What are the kind of the categories of people, and what kind of person? You say 1, 2, 3% of the population is here. Some of them are more intrigued with the Sam Bankman-Frieds and blockbuster stocks and a lot of different things. But what are the kinds of people that you work with?
Smart ones.
Yeah.
Every single one of my clients obviously has made that decision where they've connected the reason and logic in their brain with the faith in their heart, knowing something's wrong, something's broken, I want to be safe. So they've all done that. Now,
High levels of personal responsibility.
Yeah.
So the demographics would be, I would say, almost all of our clients, like 90%, would fall between the range of like age 55 and older.
Okay.
I would say all of them are conservatives, 100%. I mean, literally,
Wow.
I would say 100%. How many of them are pro-Trump versus never Trump? Maybe 70, 30.
Probably a lot never even comes up.
Yeah.
I mean, it does in conversation because we get to know our clients.
Right.
Right. We're asking you questions. We want to treat you like family. We're getting to know your rationale, what your fears are, what your dreams are, what your goals are. Is it income? Is it growth? So we get to know our clients. So we get to know a
Right.
lot of these
Yeah.
things. Religiously, I would say they're all over the board. From ultra fundamentalists, Christians to New Age type, metaphysical type people, and everybody in between, to people who don't even believe that there's a God for some reason. It's like everybody in between. But all of them know that there's something wrong with the system as we have it, and they want to protect and preserve.
Yep.
I would say 70% of our clients are IRA business, 30% are non-IRA, maybe 60-40. But the majority is IRAs because after people have their wealth stored up.
Right. Yep. And do you feel like it's become more of a shift over these last, maybe year or so from people are like, oh, I got to get out of what I was in before to where I am now? Yeah.
Huge, massive shift. I mean, when Silicon Valley Bank went under, that was the busiest I've ever seen this industry in 30 years because people were afraid that their bank money was going to go away.
Right.
Now that we're seeing what happened in Japan, I haven't seen this kind of a flurry of activity of people making switches since Silicon Valley Bank, which was the busiest ever.
Yep.
So people are starting to see. But of course they are. It's like fear causes people to do things sometimes wrong, most of the time wrong.
Yep.
A lot of times it causes them to do absolutely nothing, but at least it causes them to question what's going on. And this is where I hope and pray that they would talk to a firm like ours that will listen to them, that aren't going to give them mainstream media narrative of, what's worked in the past is going to work in the present and the future because it's always worked in the past. No, it's a different world.
We've never had this present.
We've never had this. So what worked in the past, this nice diversified portfolio of 20 different funds, right? Just these index funds. When stocks stink, you go into bonds, and bonds stink, you go into stocks. We've heard it all over and over and over again. We are at a pendulum shifting moment in the history of the world where I think what worked in the past isn't going to work in the present or the future, which is why we need to make that shift.
I think that's why it's important, too, that people can get a hold of you for a free consultation because they can get all their questions answered, find out what their options are, if they have an IRA, if they don't have an IRA, but they can walk through that process, and you've got people that are prepared to be able to help them. And we've had the opportunity to meet a portion of your team, and we were just blown away.
Yep, we actually flew out to Denver.
Yeah,
and
to meet when
a GA club. One thing that just jumped out the charts, like every single person I met, I kind of categorize sometimes like that. There's kind of people that, like, if your daughter brought this guy home, you'd be like, like everybody that worked for you is the kind of person like you'd want your daughter to bring home.
You would
on a date.
Sharp.
I'm like, every one of these guys are the kind of person you'd want your daughter to date.
Yep.
And then the girls are kind of the opposite version. Just good.
You want your son to
You want
date,
your son to bring home, like, just good, like the cream of the crop you would meet in any different situation, like at church, like the sharpest kid there, when I say kid,
Well, everybody's a kid.
they might be in their 30s,
Right?
40s.
40s, it's like the group of kids are growing by the day. But just positive, like bright-eyed, like hungry, ambitious, like hardworking, I'm like, man, where do you find all of these people in one spot? It's amazing.
I'm very biased, but we have an amazing
we do.
team. They love Jesus. It's a function of prayer from our family for this company for decades, right? When we started, it's like, okay, how are we living on a dream, living on fumes,
right?
Wishing we just had nothing. Jolene would be praying nonstop that her husband would actually, find something that could actually, but I had this dream.
Yeah.
This is where it started. It's like, we're an overnight success as a company that took 30 years to get there.
Right.
Right.
Yep.
So, but it's our team is an answer to decades of prayer, that they all treat people like I would treat them. They treat people like Jesus would treat them.
Yep.
Now, this is how we want, when we talk about leadership, it's like, my philosophy is be the one that serves the most, right? Lead from the bottom up, not, pounding on people from the top down.
Right.
When you empower that kind of growth and decision making, I'm very hands off, but you have to hire the right kind of people to do that with, right?
Yep.
That's my team. They're amazing and they're incredible.
Very responsible. Yeah, and I've said this so many times to you before, but it really is the truth. Every time that we are at a live event, people are always coming up to us and thanking us for the introduction to Dr. Kirk Elliott and his team. It happens every time. I haven't had an exception where it didn't happen at an event where somebody came up and said, thank you so much for introducing me to Dr.
The two biggest are you and then Dr. Brian Artis.
Yeah.
We did a series of shows with him like early in COVID where he was like breaking down protocols and how to. There's people like, I got my father-in-law out and got him on this, and I think he would be dead now. Like saved their lives. Like those are the two, one where people are like emotional and they come up and like, thank you. And I'm like, man, I'm glad we started the podcast and did the show to platform, those voices that have been able to do that. Let me ask you another question about this. You got people watching and they're like, oh, I want to kind of, I deal with people in the comment section. Sometimes people are like, well, that's nice if you got a lot of money, be buying stuff. I'm just trying to make ends meet, this kind of stuff. And sometimes our words are powerful and sometimes, that becomes a thing. But in your book, thrive during the economic tsunami. You start out with this thing right out of the gate. The first chapter is a punch in the mouth to just anyone reading, because no matter who you are, it applies, and it's a little convicting about the way that we spend. We're such a prosperous country. We have such a high standard of like, well, I need my double whipped frappuccino. That's how I get started in the morning. And we have a little bit of thing in our culture that's like, coffee cups, don't talk to me till I've had my coffee, or all this kind of, one that kind of grinds me, and even churches having this like happy wife, happy life, and stuff. I'm like, how weak are these women that if she's not happy, nobody can be happy?
Right.
Like that's not biblical. That's not a Proverbs kind of woman. That's not like if she hasn't had her coffee, everybody's walking on eggshells. That's not being a powerful, victorious, courageous woman. Like all of this is just weakness. But we're so prosperous and so abundant as a country, and most people have air conditioning, and you can change the temperature of the room by 1 degree if you want. And we have cars, and we go to the gym, and we have to find a place to create resistance on our bodies. Otherwise, we just atrophy, because you can have a pretty good life in America and not really move.
Yeah.
So you got to find a place to lift a weight, or, a lot of farmers don't lift weights, like their life is that.
Right.
And so this idea that we don't have any money, you've been in the American economy for 30, 40, 50 years, and you're like, well, I don't have this. Talk about the $3 million cup of coffee. And it's actually changed a little bit since your book came out. But
well, yeah. I mean, in the book, it was the $2 million cup of coffee, and it was for a long time.
Yeah.
So I was redoing some math, and it's like, it's not $2 million cup of coffee anymore. It's $3.7 million cup of coffee. So what is that? So,
and you've shared the story with your kids too.
Too many times.
I know, because they've told me.
Yeah.
Joe let us know too.
Yeah. Joe said, my kids are tired of this story, right? And they are, but it's so important.
I get convicted every time you share it, because
too.
everybody's got a cup of coffee or something in their life like that.
I know so we're using the cup of coffee as the example, but it could be anything. It could be a subscription to a game app. It could be a satellite bill. It could be whatever. It could be anything. So in this example, if you at 18 years old started going to a coffee shop 5 days a week, right? So that's average 22 days a month, before work, during lunch, whatever. And you spent $4.50 on a coffee. It's like $4.50 a day. That's not much.
That's
right?
nothing.
I deserve this too.
I deserve it.
This is how I get my mind right going into work, so I have a great day.
Yeah.
Yeah. So $4.50 isn't that much when you look at some of the other drinks that they have at these coffee shops. Some are $8, $9, $11, right? It's like, what?
Yep.
Right. But $4.50, 5 days a week, and assume if you were to invest that's $93 a month. Mm-hmm. And you assume a 12% rate of return on your investment. Well, by the time you're 65, so from starting at 18 until you're 65, how much is that worth? You're $4.50 a day on coffee, not doing anything else, right? It's a lot. It's $3.7 million.
Wow.
Right? So here's where
The picture sums it up too, man.
It does.
I mean, so that's not even adjusted for inflation, right? So what if you didn't drink your coffee and you also found other stuff that you could cut out?
Yeah.
Maybe you go out to lunch every day for $15, right? Which I look at people every single day, and we work downtown. I'm looking. They're at Cava. They're going to Chipotle. They're doing all this stuff, and it's $15 a pop. Plus, they probably had a morning. I mean, they're probably looking at $20 a day that they're spending. Yep. Okay, that multiplies that to probably 40 or 50 million. It's insane, the compounding of interest that starts to happen. Right? It's like, I can't afford
inflation.
When people get to retirement, it's like, I have nothing. I never had a job where I was able to. It's like, did you have $4.50 a day?
Yep.
This is what could have happened, right? So the point is not to harp on people who love their coffee. The point is we have to find some place that we can trim in our lives. Oops, sorry, I almost knocked that over.
Which is a cup of water. It's not even a cup of coffee.
I know, and I was getting mad at the coffee. I was going to knock it off.
Principle. He's not even drinking a cup of coffee.
I was going to knock it off the table.
A cup of water.
we have to find ways where we can save.
Yeah. Well,
Right.
Joe made a good, so Joe's your wife. She and I were talking, and she made a great comment. She was talking about like when your kids were little and you guys would go out to restaurants, that nobody got soda or anything like that
Right.
because it adds up.
Yeah.
You know, a couple dollars per soda or whatever, that adds up. Even going to like Cold Stone, you didn't do that. You would go get, like a pint or something and take it home, and it was like $3, and then they could have it for the weekend or whatever.
Right.
But those are little things, the small little changes that people can make, but make a big difference overall.
Well, she was really good about managing a house when I was living on a dream. Because when I left the old firm that I was with, what I started with, I had a 7-year non-compete clause.